Hi, I'm Gregg Pacitti, president of Ranch Capital Advisors, and I'm so excited to have legendary investor John Thomas on the program today. John was one of the pioneers of the hedge fund industry. He thinks the Dow Jones will not only go up from here, but could potentially hit over 120,000 within the next 10 years. Stay tuned. Hey, John, thanks for being here. I appreciate it.
Great. Well, thanks for inviting me. Always nice to have a fun event to look forward to when the market closes.
Wrote a book back in 2016 called the Stocks to Buy for the Coming Roaring 20s. So I wanted to talk a little bit about that. And, the premise of that book was you had mentioned that there was this intergenerational arbitrage. So if you
if you can go back into markets 1,000 years and you see the same 40-year cycle continuing, and nothing has changed in that 1,000 years. It works in 20-year legs. So do the years 1929, 1969, and 2009 have anything in common? Can you think of anything that happened in those 3 years?
Just massive sell-offs.
Gigantic stock market crashes.
Yeah.
Those are all exactly 40 years apart. What happened 20 years after each stock market crash is we got an absolute boom in stock market prices. So, we got the after 1929, you have 1949, and that began a 20-year bull market in stocks that ended in 1969, or actually 1973 with the onset of the OPEC crisis. If you go up to 1969, what happened 20 years later? Well, you had this tremendous boom in stocks going on, triggered by the Reagan reforms and the first look at quantitative easing. And of course, that then crashed 20 years later in 2009. So where are we in these cycles now? Where the last bottom was in 2009, that was the dot-com bottom. And we are halfway through one of those 20-year up legs. And we've already risen more than 400% off the bottom of the last leg at 6,500. And we have another 400% gain to look forward to over the next 10 years. And that takes us to Dow 120,000. So we're actually halfway through, in terms of percentage gain, the move from 2009 to 2029 by going from 6,500 to 29,000.
I mean, it's hard to even comprehend saying Dow 100,000. I think when I mention that to anybody, it's like so out of their thought process that that's something that's attainable within a decade.
Now we have 10 times the technologies that we had in the 1990s. The last bubble top was driven by technology. We basically had everyone buying PCs for the first time. We had everyone using the internet for the first time. And we had cheap software. We had Windows 3 you could buy for $50. So the combination of those three provided the technology springboard to get you that 20-fold return from 1982 to 2000. Well, now we're looking at another 20 times return, except this time we have 10 times more technology drivers than we did in the 90s. We have quantum computers. We have gene editing, CRISPR technology. We have super fast computers. We have AI. We have electric cars and all the data they collect. So there are a huge number of drivers So my 120,000 may be low, and a lot of long-term forecasters also are telling me that's a low number. But I have enough people disbelieving the 120,000 number as it is, so I don't need to push it.
Yeah,
All I'm
they're
saying
calling you mad.
is a gain over the next 10 years.
Yeah,
What's so big about that? That's exactly what we've done over the last 10.
right.
That's why Warren Buffett called his biography Snowball. Earnings snowball year after year as the dividends keep increasing and the stock appreciation keeps increasing. And that's always going to be true. I mean, that's the only really free lunch that you have in investing is reinvestment of dividends.
We're big dividend investors, although a lot of our clients end up, living off those dividends and spending them. And although the pool is a little bit smaller in the, in some of the tech sector for dividends, but there's still plenty of opportunities there for, riding out the some of that technology wave and still getting a good income from their portfolio. So we're always working hard on that. And how about housing, John? I mean, what's your take on the housing market? It's heating up again. Interest rates are at all-time lows. Do you feel that the housing market, are we getting close to another bubble, or is do you still see?
Oh no, we're only halfway through the current bubble.
Okay.
But what drives the markets over the long term is demographics. When you have large numbers of big spenders, consumers age 40 to 50, you have great bull markets. And when you have low numbers of big spenders, you have very weak economies and weak markets. So we're just entering a period of time when the millennials, of whom there are 85 million of, are entering their big spending period. And that's 40 and onwards. And when you have a lot of big spenders, the house of prices goes up, furniture, home construction, anything even remotely related to housing just goes through the roof. And in fact, one of our core holdings for the last couple of years has been Home Depot as our way of cashing in on that.
Yeah. Yeah. I know, like, my generation X is like 65 million. And so that wave of 85 million coming in, I know in our area here in Florida, they're building houses as fast as they can. And, they're leaving the markets super quick, and they don't seem to be stopping. So it's pretty amazing to see.
Yeah. Well, you have, half of all the new home builders who went bankrupt in the 08-09 crash never came back.
Mm-hmm.
So you have a structural shortage of home construction right when you have a record generation trying to buy those houses. So, housing demand far outstripping supply. In that situation, prices can only go up, and this has another decade to run. So
I also wanted to get your opinion on, you talked a lot about solar energy and obviously solar energy had its bumps in the roads, but seems to be getting a lot cheaper and a lot more mainstream. What's your thought? Do you still feel like solar energy is going to take the lead in?
Well, as of yesterday, it's going to be illegal to buy a gasoline-powered car.
I saw that.
In California after 2035.
Mm-hmm.
The state is required to have 100% of its grid from alternatives by 2030. So I'm already there. I have a 59 panel array. I have 3 Tesla Powerwalls. So we're totally grid independent and just are connected to PG&E so we can sell our excess power to them. We go to an all solar grid literally in 10 or 15 years. And the play on that has been Tesla. The Tesla is the ultimate solar play. And I power all of my Teslas off of the solar panels. So I think that's going to be the future. Every high-end house is going to have its own solar panels and its own battery system, so you can be independent from the grid at any time. We've seen a 5-fold improvement in battery capacities over the last 10 years, that's going to improve another fivefold in the next 10 years. So electricity run cars will be far and away cheaper than gasoline ones. The government isn't going to need to mandate any of these dates, drop dead dates saying you can't buy a gasoline car after X. In fact, gasoline cars will be 5 times more expensive than electric cars, require no maintenance for life, and can get repowered at your home.
Yeah, it's hard to beat, for sure, and better, for the environment and so many other reasons. So, I want to talk a minute about inflation, because that's always seems to be a hot topic. The Fed has come out and said, "Hey, we want inflation to increase," and you write a lot about how there's so many deflationary forces because technology is making everything more efficient. What's your view on inflation? If that's something that investors need to worry about, and if so, is gold still like that ultimate hedge, or is it you're just better off investing in stocks for your inflation play?
Well, a few weeks ago, the Federal Reserve said, well, we're going to run the economy hot, and we don't care if inflation rises over 2%, as long as the average inflation rate doesn't go over 2%. Well, that's kind of like saying, well, when I fly by flapping my arms, I promise not to go more than 100 miles an hour. It doesn't address the issue of I will never fly by flapping my arms.
Got it. Yeah.
Technology is improving so fast, and is in fact accelerating, that it just wipes out any chance of inflation at all. And this year has had more inflation killers than ever with the pandemic. People don't fly to meetings anymore. They go to Zoom. They don't use gasoline as much as they used to. There've been price destruction on every front this year. So, anywhere you look, there's just been massive deflation through technological advances, and that's increasing. It's not decreasing.
And do you think that COVID changed anything as far as your outlook for stocks, or maybe?
It accelerated my outlook, and that it brought the future forward much faster. The rate of technological advancement essentially increased 10 times with the pandemic. You've had millions of businesses just change their business models overnight, many of them with great success. So the future started happening fast once everybody was shut down.
Yeah, it almost feels like technology is now the new traditional blue chip stock that that your mother and father always held. It's where back in the 90s the tech was considered risky, but this seems like to me just to uncover about how needed and dependent and how secure it is versus a lot of other things that are a lot exposed out there to things like the pandemic.
Well, and we have had technology as our core holding for 10 years. Occasionally we'll dabble in banking or airlines or some of the domestic plays, but it really has been an all tech, all biotech portfolio for 10 years, and I don't see that changing.
What sectors within technology, if you want to share that that you talk about a lot, that people could focus on as these are the areas within tech that you see a lot of growth over the next decade?
Well, the chip sector is kind of in a sweet spot right now. It's been selling off for the last month, but if you get an actual economic recovery next year, then you have a global chip shortage developing, and as 5G comes on, everything in the world is going to need more chips, from cars to your local bread basket. So Advanced Micro Devices is the cheapest one in that sector right now. They're currently overtaking Intel when it comes to better designs and efficiencies in production.
And you did mention like biotech, so and you have some pretty interesting thoughts. I thought, if you could touch on that a little bit, I think people would, I thought it was very interesting.
Well, the COVID-19 has kind of obscured the fact that drug companies are making tremendous advances, not only on COVID-19, but on 100 other diseases as well. And I believe that within 10 years, all major human diseases will be cured by just taking a pill, literally. With AI, you can have a supercomputer design a molecule to kill a specific cancer cell, and then have a lab mass produce those cells.
More than anybody else I know, like your calls, like you're being able to see forward and to get on a trend while it's just starting to happen, or being able to see it. What kind of advice would you have for people?
Well, I tell people it's really very simple. Research in, profits out. That the more research you do on a sector, the more confidence you'll have in your conclusions, the more money you make trading.
We've been subscribers for many years, and I'm a big fan of your work, and I appreciate you taking the time to meet with me online here. So hopefully we can do it again.
All right. Well, thanks for inviting me on, and
all right.
Good luck and good trading.
Thanks, John.
If you ever need financial planning services, feel free to contact us anytime.